So you're here for the buy sell example, and initially I was going to have some attachments and let you download them. And when I looked at the attachments, I thought that's not going to make much sense. So I figured I'd just do a quick video and go through the example of the buy sell for using premium finance based on the YouTube video that we had with Dan Walks. So I'm really excited to do this. I think that this is a really interesting application of premium finance for the buy sell. So I'll explain this as best I can. And if you would like to see an example built for you, then you're going to need to reach out to us. You can start by scheduling a call with us, and we'd love to have that conversation. And you can do that below on this page, or up at the top, book a meeting. That's where you'll be able to do that. But let's go through this. So what we have here are actually two bank sheets here. So we have a 52-year-old male and a 55-year-old female. They are business partners. Yes, this was an actual case. This is a real life example. So they're business partners. Their business is worth about $15 million. And the reason that they're doing this buy sell in the first place is because they do not want to go into business with their partner's spouse if something were to happen to their partner, which totally resonates with me. I have a partner. His name's Aaron. You've seen him on the channel. His wife, Jessica, is phenomenal. I love her to death, but I don't want to be her business partner, and she doesn't want to be my business partner. And likewise, my wife, Kate, and Aaron are also good friends, but they don't want to be in business together. And so the reason we do these buy sells is for that very purpose. You have a partner, something happens to them. You want to be able to buy out their interest in your company. You do not want to assume a new business partner. So a $15 million business with two partners, they each are going to need their own $7.5 million death benefit life insurance policy. And so that's what we have here, $7.5 million. Well, $7.5 million in death benefit is a really expensive life insurance contract, especially if it's going to be a permanent policy. That's why most of these buy-sell agreements are funded with term insurance. Now, the problem with term insurance, of course, is less than 2% of term insurance policies ever pay out. So it's essentially a sunk cost, which is not the end of the world. But man, these life insurance vehicles are phenomenal vehicles for high income, wealthy individuals looking for wealth preservation, looking for a way to earn money that's maybe outside of the stock market. And so is there a way to do two things at once? And the answer is yes. So let me tell you the structure of this policy, how we did it. We are going to have to finance the premiums from the bank to the tune of $590,000 a year for 10 years for our 55-year-old female. And it's going to be $625,000 a year for our 52-year-old male. Why? Because males have a higher cost of insurance than females do. Even though he's younger, he's still more expensive for the same $7.5 million. Well, we don't have $1.2 million a year to pay in life insurance policy premiums. And that's why we're borrowing that $590. And that's why we are borrowing that $625. Well, if we're borrowing all the premiums, what's this actually going to cost us? We are going to have to pay interest on this policy design. So we're paying $125,000 a year for 10 years on policy number one, and we're paying the same $125,000 a year for 10 years on policy number two. We are also going to need to post some additional collateral for, it looks like, 4 years, the first 4 years of this policy transaction. But eventually we get all that collateral back in the 5th year. So is that a cost? If you'd like to view it as a cost, I see where you're coming from. I don't view it as a cost, so to speak, because you are getting it back. After the funding is done, 10 years, we're no longer going to pay premiums, or rather interest payments, so $0 in interest payments, but we are going to exit this loan in the 13th year. Now, there's a bunch of ways to do this. Number one, we're showing that you're going to exit the loan by taking an internal life insurance policy loan. So this is a self-contained plan. This is not assuming outside dollars. The only outside dollars going into the plan are the interest payments. And again, of course, if you assume the collateral, then yes, but you get the collateral back in the 5th year. So the only out-of-pocket is the interest payment, $125 a year for each policy. It's a self-contained plan because we're using a policy loan, which is why you see the death benefit and the cash surrender values here drop from year to year. We're paying this off internally. If you were to sell the business, I'm going to submit to you that negotiating in the payoff of this bank loan is a great way to work this policy. If you're selling the business and you have a finance policy on the books, negotiate a bank payoff with the seller. All right, so $7.5 million. The policy is now free and clear. We've done that through a policy loan. Well, at some point in time, your partnership is going to dissolve. At some point in time, you're no longer going to need the buy-sell. And so when that does happen, we're going to turn this policy into a lifetime stream of income. And this income coming out is going to be tax-free. It's going to be non-reportable to the IRS. And it's also not going to be subject to the whims of the stock market. And so starting here in year 18, these policies are both going to kick out $300,000 a year, tax-free for life, with no market risk. And what are we left with? Well, we're left with a policy where the business paid in $1.25 million into each of these policy contracts for interest payments for their buy-sell. At some point in time, that business relationship dissolved or the buy-sell was no longer needed, and we used these policies as lifetime tax-free income streams. And we took out $9.3 million and $8.4 million tax-free with no market risk from our policies that we needed for the buy-sell. And all it cost us was $1.2 million each. And this is a phenomenal way to finance a buy-sell that is more than just a buy-sell funded with term insurance. It's now a wealth building, wealth preservation tool. And for businesses that are, highly valued and have a partnership aspect, this makes tons and tons of sense. So hopefully this has been helpful. Again, originally we were just going to have some downloads, but there's a lot going on here, so I thought I'd just do a video and explain it. Hopefully it's been helpful. If you want to see this example for you and your business, reach out to us, schedule a call. We'd be more than happy to model this out for you and your specific situation. Until next time, take care.